Hi, I am John Coles, the managing broker at KW Reston and Fairfax Gateway as part of the Alliance Group. Today we're going over the Maryland Realtors VA Financing Addendum. Remember, this is not Virginia, this is for Veterans Affairs. So if your client is a veteran and going for VA financing, this is the addendum that you would use. Remember that MAR contracts have the main contract and then an addendum for everything. So the addendum dated, you would fill in today's date to the contract between the buyer. It's pre-populated here. So Joe Smith as the buyer, Sally Sue as the seller, and then the property address would go on the next line. Now, in bold here at the top, this contract's contingent upon buyer obtaining a mortgage guarantee. Notice it's not called financing per se. Veterans Affairs calls it a guarantee because they're guaranteed loans from the Veterans Administration and secured by the property as follows. So we want to talk to our lender to make sure that we have the correct funding fee in here, the base loan amount and the total amount of their loan. Loan program is going to be VA. Term of the loan, probably 30 years, and an initial interest rate, we'll say it's 5.5. When you're filling out this portion, it's very important to talk to the lender to know what the funding fee is, the loan amount, the term of the loan, etc. And if there's any additional financing program. Also, while we're talking to the lender, we're asking them the questions on the next line. Buyer agrees to pay lender any loan origination or discount fees of either dollars or percent of the loan amount. And the interesting thing, are there any seller fees that the seller is going to pay for the loan? Buyers shall receive the benefit of any reduction in said fees, again, because they're veterans. Under the settlement costs paragraph of the contract, the buyer obtaining VA financing is prohibited from paying certain charges, and the seller hereby agrees to pay such charges not to exceed. And again, we're going to put a dollar amount in there. The next paragraph talks about locking, and this is locking their interest rate and loan discount fees. By accepting a loan agreement whereby the interest rate and loan discount fees are not being locked in, buyer agrees to accept the rate as charged by the lender at the time of lock-in, and the responsibility for additional loan discount fees charged, and buyer shall remain bound by the terms of the contract, notwithstanding any changes in fees. So the buyer is locked in to the financing here that they're agreeing to. Paragraph 2 goes into monthly payment and what is included. It will include principal and interest plus 1/12 of the annual real estate taxes, ground rent, special assessments, or charges, if any, hazard insurance premium, the hazard insurance premium, flood insurance premium, and private mortgage insurance where required. So one thing to remember here, to explain to the veteran, we have PITI, principal, interest, taxes, insurance, and there might be private mortgage insurance. If they're buying in a flood zone, there might be additional flood insurance, etc. Paragraph 3 goes into loan underwriting, and buyer and seller understand that the lender will have to resubmit the loan to underwriting if from the time the buyer's loan application was approved to the time of settlement. So again, it can go into underwriting again at any point. And there are any or if there's any increase to the interest rate or origination or discount fees. To the extent such charges do not conflict with the condition of the contract, buyer agrees to comply with the lender's request for additional or updated information as required to approve the loan. So buyer will work with the seller to get through the process. Seller agrees to cooperate with and timely respond to requests for information or documentation made by lender and or any additional financing programs. So again, the seller will cooperate with the lender if the lender needs anything from the sellers. Generally, they don't, but they could. Paragraph 4 talks about what a Veterans Administration guaranteed loan is, also known as a VA loan. Buyer's deposit shall be placed in an escrow account in accordance with Title 38 of the U.S. Code, Section 3706. It is expressly agreed that, notwithstanding any other provisions of this contract, buyer shall not incur any penalty or forfeiture of earnest money or otherwise obligated to complete the purchase of the property described herein if the contract purchase price or cost exceeds the reasonable value of the property established by Veterans Administration, or buyer is not approved by Veterans Administration and the lending institution. So what does that mean? I'm going to stop here in the middle of the paragraph. So the VA likes their acronyms, just like we like our acronyms, MAR, MLS, NVAR, GCAR. The VA calls the appraisal the CVR, Certificate of Reasonable Value. If you hear that, just know it's the appraisal. So if it does not appraise or the buyer's not approved, the buyer can get out and with no penalties have their earnest money returned. As we continue, in the event, here's the CRV, I'm sorry, CRV, not CVR. Certificate of Reasonable Value, the appraisal, is less than the amount of the contract price. Buyer shall have the privilege and option for 5 days after receipt of the VA appraisal, the CRV, to proceed with the consummation of the contract without regard to the reasonable value by Veterans Affairs, and by giving notice to the seller of his intention to do so in writing. During the 5-day period, buyer may either, 1, take no action, which will result in the contract becoming null and void at the end of the 5-day, and again, we move over to the next page, the 5-day period. Or, so again, the buyer can either take no action within the 5-day period and we end, or 2, notify the seller they agree to move forward with the contract under the contract purchase price, or negotiate with the seller to lower the contract price. If the parties agree to lower the contract price during the 5-day period, the buyer covenants and agrees to be bound to proceed with consummation of the contract upon the contract price. So again, we're agreeing to a new price. If after negotiations, the seller refuses to lower the contract price, but the buyer still wants to proceed with the contract at the contract price, the buyer must notify the seller in writing of their intention to do so before the 5-day period expires, or the contract will become null and void. So if we're going back and forth negotiating, and the buyer still wants it at the contract price, we have to let them know. Otherwise, it becomes null and void. The contract is contingent on the approval of the House and buyer by Veterans Administration and lending institution. If the aforesaid approval is not obtained, it is expressly agreed that the buyer shall be refunded the deposit and be null and void. So again, the buyer doesn't get approved, the house doesn't get approved, buyer can terminate. Paragraph B talks about VA funding fees. And remember, this is important to talk to the lender. What fee are we putting in here? Is it 1%? Is it 2%? Of the principal sum of the loan, unless buyer is eligible for and obtains an exemption from the VA or elects to add the funding fee to the principal sum of the loan. Buyer, and again, here we're putting a check mark in the box here. Buyer hereby either agrees to pay the funding fee or add it to the funding fee as part of the loan. So they can either pay it at settlement or add it to the loan amount. Lender's fees to seller, if any, shall be paid by seller at settlement along with the excess amount of any buyer fees, which are limited by the Veterans Administration. Paragraph 5 goes over wood destroying insect inspections. So, should lender require a wood destroying insect inspection, and they generally will, as a condition of financing, the parties agree that the buyer may conduct the inspection at the buyer's expense. This is a recent change. It used to be that anybody but the buyer could pay it. Now the buyer can pay it. Lender required repairs in connection with a lender required wood destroying insect inspection shall be performed in accordance with the lender required repairs paragraph of this addendum, which we'll talk about in a second. Seller shall have no obligation to consider any other request for repairs and or credits in connection with the lender required wood destroying insect inspection, unless a wood destroying insect inspection was negotiated by the parties as part of the property inspection addendum. So the seller does not have to do anything unless it was part of the wood destroying unless it was part of the property inspections. In all transactions involving VA financing, all fences and outbuildings will be included in the inspection certification. And pursuant to VA regulations, buyers may be charged for wood destroying insect inspection fees and pay for repairs. And this website here will take you to more information about that. Now, when you're getting a Veterans Affairs loan, there are the lender may require some things to be fixed, such as chipping and peeling paint, more than 3 steps without a handrail, GFC eye outlets, other health and safety issues. So that's where we get into lender required repairs. In the event VA and or the lender require any repairs or improvements, also known as required repairs, be made to the property, seller agrees to perform the required repairs and pay and here's where we put in a dollar amount. Maybe it's $1,000. Again, bold, seller's obligation to perform and pay for the required repairs shall be in addition to the seller's obligation under the terms of the contract. Should the cost of the required repairs exceed the repair amount, the seller may elect to pay the total cost of the repairs. So again, seller says, I'll pay for all of them. Or the seller may terminate the contract by written notice to buyer, which must include a written estimate. So again, we need a written estimate of the cost of the required repairs. Said written notice shall be provided to buyer within 5 days of the seller's receipt of the written estimate. The contract shall remain in force and full effect within 5 days of the buyer's receipt of the seller's notice of termination. Buyer elects in writing to pay the difference between the cost of the required repairs and the repair amount listed above. So again, let's say the repairs are $3,000, we pre-negotiated $1,000. Buyer can say, okay, I'll pay the other $2,000. Or D, if neither buyer nor seller elects to pay the excess cost of the required repairs, contract will be null and void and all deposits returned to the buyer. So those are our 4 options. As per usual, all other terms and conditions of the contract remain in full force and effect, and then it is signed by the buyer and the seller. And that concludes the VA Financing Addendum. Remember, you would use this when you're working with a veteran. Stay tuned for more contract videos, and see you soon.